Welcome back to the Daily Nugget, a daily property insights, one topic, 20 minutes or less, 7 days a week. Myself, Lawrence Lotze, and today I'm joined by Andrew Armstrong, a mortgage specialist and fellow property investor. Andrew, question to you today is working with non-banking lenders or non-bank lenders or something that's outside of what people understand as the main bank that's see down the end of the road. Talk me through that.
Yep. Okay. So non-bank lenders, goes without saying, obviously not the bank, not your major retail banks in the country, and they're just great when it comes to getting sorted where the bank's either said no, or the bank's too slow, or the bank's saying, look, not this week, maybe in a month's time, depending on what we want to do. But essentially, they can do things where they maybe you're short of money, you need another $100,000, and there's some great ones out there. I mean, without sort of rattling off all of them, there's the likes of Resimac. That's probably one of the biggest in the country, and bank, non-bank, near bank. They're absolutely great to deal with and very useful there. And then you've got the likes of Bluestone, you've got Pepper, you've got Liberty Home Loans, Base Corp, and a ton of the other ones. Like that. You've also got mortgage trusts, Midlands Mortgage Trust, for example, and FMT, another couple of big ones in the country there. And essentially what they can help you with is to go and get money to go and do what project you're wanting to get done.
But obviously there must be something a little bit different from being a non-bank lender. So am I paying the same rate? Is it accessible? Is the term the same? Because if I'm getting the exact same thing as I was getting from mainstream banks, and it's easier, it seems to be, why wouldn't most people not go to non-bank lenders?
Yeah, great question. So typically you've got an application fee, and they vary from sort of a fixed fee to a percentage of the loan amount. Interest rates, again, typically another percent on top to double the standard bank interest rate. So you're only going to go there with a specific purpose, and often what we find is that that they will go there with an idea to get a property under contract. They'll buy the property, and then potentially they'll look to be selling it within a 3 month, 6 months, 12 months, 2 years. That there's an entry position that they just need to get it. They're going to go and get something resolved in their life. They're going to go and get their average income up, and then they're going to refinance it to a standard bank, or potentially they're going to sell the property at a profit. And so there's always an exit position, or typically there's an exit position with those lenders when you go to them.
And another thing is with them, because they're non-banking lenders, do they require to follow the same LVR rules that banks do, or do they follow their own set of rules? When we're talking about LVR rules to anyone, it's the amount that a bank can actually loan you depend on your asset value and your equity. Do these Resimac and those institutions, do they have to follow those same rules?
Yes. In the short answer, yes, they have to be responsible lenders. They have to abide by the rules, but they don't have to follow them without naming a specific lender there. They don't have to follow them necessarily to the T. They can come up, so they have their own policies that they can adhere to. So that is part of the benefit of going with them as well. There's always a reason why you choose them, and potentially borrow more than what the bank LVR limits are.
And you could go across them for $2,000, $5,000, $10,000. You're not having to go across to a non-banking lender for the $100,000 or $500,000 bold renovation. You can go for quite a small request as well.
Typically, you can have a security with them. So security being a property, property with a title. Sections are generally a no-go, although that's not impossible either. So you need to have something that they can assign a mortgage to in this context now. We can touch on it later about where there's finance companies involved or caveat lends, but typically when we're talking about this, it's first mortgages over a property that you require finance for.
Yep, but they're happy to, even if they take that on, but they're happy to give me quite a small loan. So some people might see them as this people go there for major developments and it's outside of the box thinking, but I might just be someone that needs 20 grand or 30 grand, and I'm happy to transfer my title to another lender, but I only need 20 grand. Do they still play in that sort of what I'm going to call small side of loans?
Well, yes and no. It depends on the lender, depends on the customer, depends on the situation. But remember that they're not going to be doing it for just for the sake of it. If you're going to go there with a small loan, they're going to have to make a margin on it. They're going to have to make up for the risk that they take there. So typically a fee would be charged, a minimum fee from that lender. So
Awesome.
you'd only want to do it if it was well worth it for you as well.
Thanks for that, AJ. And to anyone else that's listening or watching,